Hey friends, so I rushed down the hallway here in the hotel. We're on our way to Walt Disney World, and I am rushing to the elevator and I am running in my New Balance sneakers. As you can see, they're New Balance, not Nikes. And so I want to share in the video today my analysis of NKE stock. I have received a ton of questions from the community because this stock is down like 60% from its all-time highs. A lot of dividend investors, including my friend Corey, shout out Corey, he's on my Patreon, which I'll link to in the pinned comment below. The subscribers are asking about Nike. I want to analyze that in the video today because is it a deep value or is it still expensive? As you can see on the screen in front of you right now, here are the metrics. You can see on the left-hand side Nike, on the right-hand side Starbucks. I'll get into Starbucks later, but I do see some parallels between these two companies, some dissimilarities as well. But as you can see with Nike, this thing is down 29% from the 52-week high. It's down about 60% from the high in 2021. And based on the forward EPS estimates, it's still trading at a PE ratio forward this year of about 35 and forward next year of about 31. And so you can see the dividend yield, it's 2.23%, and it has a high payout ratio, very high payout ratio. So whereas the 5-year dividend growth rate is about 10.3% per year on average, I don't know if they can keep that up because the payout ratio, it's really high already. So off the bat, you can see there from a fundamental standpoint that even though the stock has fallen a lot, it's still expensive. And I think that's lesson number one. Just because a stock falls in share price does not mean it's a value. And just because a stock goes up a lot does not mean it's not a value. And so let's look at the screen again, though. As you can see on the screen, I'm going to share this really quickly, but I own Starbucks. You know it's one of my largest positions. And in terms of Starbucks, it's down as well off the 52-week high and off the 2021 high, but not as much as Nike. But you can see on a forward PE basis, it's kind of in the same range, although it's a little cheaper than Nike. On a starting dividend yield range, it's at a similar kind of area of Nike, and the payout ratio is somewhat similar as well. And the 5-year dividend growth rate, it's not too much dissimilar as well, and it will probably slow because the payout ratio is high. The reason I'm comparing these two is when I look at any new stock, I'm unfamiliar with Nike, or I was before this analysis. I have to compare it to something that I know. And Starbucks to me feels like a similar company. It's an iconic brand, just like Nike. It's facing times of change, times of transition. It's kind of plateauing, if not down in share price, as new management tries to kind of turn the company around towards its next leg up in the journey. And of course, I want to acknowledge here that no stock goes up in a linear fashion. There are peaks and valleys and plateaus, and Nike is trying to figure some stuff out right now. Starbucks is trying to figure some stuff out right now. Where they both stand, they're expensive in terms of PE ratio, because I think the market believes in these iconic brands that the management teams will turn things around. So I want to kind of compare them as a reference point for myself. But let's look at Nike. Let's look at the fiscal Q3 2025 results. As you can see on the screen in front of you right now, this was just yesterday the results came out. And the results honestly were not very good. Revenue was down 9%. And 7% on a currency neutral basis. And so overall, they're saying we're making progress on this win now strategy, and that's all good and everything, but revenue is down quite a bit. Now, keep in mind with the Starbucks analysis, with the comparable from Starbucks revenue has kind of plateaued. Their earnings are down a lot, but at least revenue is kind of plateauing, whereas with Nike revenue, it's actually going down. And that scares me a bit. That scares me a bit about Nike, but let's keep going. As you can see on the screen in front of you right now, this is slide 2 from their earnings release yesterday. As you can see, I want to point all the way to the bottom of the screen. Net income was down 32%, and diluted EPS was down 30%. Diluted EPS was down a little less than net income because they are doing share buybacks. And I actually like that. I think this company with the share price tanking so much, maybe at least they're doing buybacks at lower prices, because companies oftentimes get this wrong. They buy back shares at really high prices. But here at least it's not a value, but it's more of a value than it was in 2021. And so they're buying back shares at a better price. But let's keep going. As you can see on the screen in front of you right now, the next slide that I want to share is the income statement. It's easier to see here because they not only have the fiscal Q3, but they have the 9 months ended. So we can see the 3 months ended and the 9 months ended. I like to look at 9 months. It gives me a little bit more of a flavor of what's really going on. But you can see both for the 3 months and the 9 months, revenues are down 9% and 9%. That is pretty bad. Revenues are tanking at this company. And why are they tanking? I'll get to that in a minute, but basically we're seeing all categories of sales or revenues are down. They're just not selling as many sneakers, as much apparel. They are selling more equipment, which is good to see, so the equipment sales are doing okay, but we're also seeing globally, over all geographies more or less, sales are down, but I'll get to that in a minute. And you can see here net income, the problems are kind of accelerating. It's down 32% in the 3 months, 28% in the 9 months. And so net income is just tanking. And when we look at just the earnings per share, you can also see at the bottom on a diluted basis, we're down 30% in the 3 months, but in the 9 months ended 2/28/25, we're down 28%. So across the board on the income statement, we're seeing revenue and we're seeing earnings falling. We're seeing earnings fall faster than revenue, which implies that the margins, they're shrinking. That scares me as well. We saw that though kind of at Starbucks. I'm going back to my reference point, my frame of reference. And on Starbucks, I've seen a similar thing. The revenue is kind of peaking, if not plateauing, not really kind of tanking too much, but we saw the earnings go down. And so they're spending more to kind of turn the company around. And it seems the same thing over at Nike. So again, different industries, different companies, both iconic brands, but I use that frame of reference just to help me understand something new that I'm unfamiliar with. I own a bunch of Jordans, but as I showed you in the intro, I'm running in those New Balance these days. But let's keep going. As you can see on the screen in the next slide, let's look at the balance sheet. So balance sheet at Nike honestly is a bright spot in all of this. I would say overall what I like most about this balance sheet, if we go down to long-term debt, it's actually going down in 2025. Now we're at 7.9 billion and it was 8.9 billion a year ago. And so it's nice to see that they are improving on the long-term debt. Overall shareholders equity is pretty flat, if not down just slightly. When I looked at this balance sheet overall, I feel that they are managing their debt pretty well. And I think that's important to see if the company is in distress, they're kind of turning the company around. It's nice to see that they have the financial footing or the bank account to really solve their problems and transition towards the next round of growth at the company. But I want to share more. As you can see on the screen in front of you right now, the next slide that I want to share is the divisional revenues. And so this is kind of what I was hinting at before, but we're seeing kind of footwear and apparel in most markets. When you just look at the last column, the 9 months ended 2/28/25, excluding currency changes, we're seeing really across the board that more or less footwear and apparel, it's going down. We are seeing some promise with equipment, which is nice. And so they do have some equipment improvements, especially North America and Greater China. But overall, we're seeing struggles everywhere in this business. I have more, as you can see on the screen on the next slide. Check it out. So the next one shows the performance over the years. I pulled this not from the report yesterday, but from the annual report. And by the way, I'll link to their earnings reports that I'm referencing in the video today in the pinned comment below. And as you can see though, this is a interesting time for Nike. And so revenue has started plateauing back as much as kind of 2024. Before 2024, it was growing out of the pandemic steadily each year, but now we're seeing revenue shrinking. And so I think when a lot of people get scared about a situation like this, it's better to look at many years, because as a dividend investor, I invest for decades into the future, not for just a handful of years. I'm looking at decades upon decades, and this paints a story that, hey, their revenue decline, it's really not as bad as it looks, because this is just a more recent thing. In years prior, you can see that the revenue growth has been strong, and they're probably just kind of consolidating here and digesting some of their growth. You can see though on the top right, EPS or earnings per share, it's been a little bit more all over the map. We're kind of seeing they've been in this range since 2021, especially since 2022. We're seeing they're in a range, they're in a holding range, and now 2025 is shaping up to be a bad year. We're seeing that earnings per share is down like 30% or so from the prior year. And so I would say say they're in this holding range here since 2021. So kind of 5 years of more or less being bound in a range. And so that's something to take into consideration. I want to take a step back here, actually, before I go to the next point. Warren Buffett, one of the most iconic investors, value investors of all time, he made a controversial move. I don't know if it was controversial at the time, but I thought it was kind of a weird move at the time. He bought stock in The Gap Inc., the company that owns The Gap, Old Navy, other types of brands like that. He bought it back in 2001. And so I started thinking, hey, let me just look, where has The Gap gone since then? When I look at the long-term chart, look, I don't know, Buffett, he sells in and out of stocks a lot. So he bought it in 2001. I think he probably bought in and out, sold over the years, but I just wanted to see, hey, he decided to buy it in 2001. Hypothetically, let's just say he held it the whole time. What would have happened? The Gap stock went nowhere. It's been sideways since 2001. And so almost for basically a quarter of a century, that apparel brand has gone nowhere. And so this is why myself as an investor, I try to actually stay away from brands that are related to fashion, because fashions can change. Fashions are fickle. It's hard to invest in fashions, and usually stocks will follow earnings. And so if earnings plateau, stocks go nowhere. And I kind of look at Nike, and they're kind of bound in this range of EPS for the last 4 or 5 years. If they don't break out of that eventually, could this be another gap? Could it be a quarter of a century where they go nowhere? I actually think that is a risk with Nike, because they have so much competition from so many other brands. And I'll get into this later, but there are many fundamental differences between Nike and Starbucks. Starbucks also is facing a period of transition. But Starbucks is such a different kind of brand than Nike, and I'm going to get into that in a minute. But let's keep going. As you can see on the screen in front of you right now, the next thing I want to go through is just stock performance. You can see from 2020 through 2024 on the bottom right that Nike has vastly underperformed S&P, and that's fine with me. I like to buy value. I like to look at stocks when they're trading on value. You can see on the bottom left, again, this is from their annual report, that return on invested capital, it's kind of fluctuated, but it's lower. It's certainly lower than it has been in prior years. And so that's something to take into account with Nike as well. I want to take a quick moment to step back and summarize just some of my thoughts based on this data. What am I doing? What am I thinking about Nike as an investment? One thing I just want to say is, for me, I'm probably not considering this for myself, but I would consider buying Nike for my kids, but I would consider at a much lower price. And so as you can see on the screen in front of you right now, yes, Nike is an iconic brand. The stock, it's very expensive still. Yeah, it's gone down like 60%, but it's still trading with a PE in the 30s on a forward basis. There's a lot of competition. In the most recent report, the revenue is down 9%, EPS is down 32%, margins are shrinking. We're seeing a broad-based decline. It's an iconic brand, so I'll give them that, and I love the brand. I'm all about the Air Jordans. I have a bunch of them. I don't really buy them anymore because I have enough, and I just enjoy the Jordans I have. Hey, shout out. If you all remember, I did a video years ago. I don't even remember which video it was, but I shared some of my Jordan collection, or all of my Jordan collection of the time, in that video. Put in the comments below if you remember that. That was a fun video. I even have more Jordans now, but again, I'm not buying them. I'm more frugal these days, and I'm just enjoying what I have from the past. And also, honestly, I feel like the Jordans of the past, there's just something about them that I like. I'm not sure on a go-forward basis. I'm kind of concerned, is the quality the same or not? Put in the comments below what you think as well. Are the Jordans that are being made now versus 5 or 10 years ago, are they the same quality? I'd like to hear what you think. I have my concerns. But let's keep going. As you can see on the screen in front of you, let's do this. So stock got way ahead of itself, way ahead of itself. It's too expensive. Now it's corrected. It's still expensive. It's a time of transition. It's a plateau, and this is normal. Businesses go through periods of plateau. Business growth is not linear, and stocks price and dividend growth, it mirrors EPS growth and cash flow growth, and there's always going to be setbacks with any company. I'm going to talk about Starbucks in a minute, but like I said, I don't like investing in fashion and apparel. If I had to invest in fashion and apparel, it would be Nike. That'd be the only one I'd consider. Starting dividend yield is great, given the 5-year compound annual growth rate. I think that the payout ratio is too high. It's kind of like a Starbucks situation. That dividend growth, it probably will slow here. I would possibly consider investing here with a multi-decade horizon. Like with my kids, like they might not even look at this thing for say 20 or 30 years from now, if not longer. That is kind of the horizon that I think is required for something like this, but I wouldn't really want to buy here for my personal situation. Of course, I never offer any investment advice. I have my disclaimers in the description below, and I'll have it at the end of the video. I'm not sharing advice. I'm not a licensed financial advisor. But for me to get comfortable with something like Nike from here, it would probably have to get cut in half again. Yes, there's many good things about the company. I'm not trying to speak down about it. I could be wrong. I love the brand. I know some of my patrons wrote in about this, especially Corey has asked, and I'm not trying to insult anyone because there are other analysts in this community who may know this company better than I do. They probably do. I've been a consumer of this company my whole life. I never really looked at the stock too much until recently, so I'm becoming familiar with it. But for me to feel comfortable, I'd have to have a margin of safety. I'd want to see the PE down in the 15s, 16s, maybe 17s, not 30 plus. And I'm talking on a forward basis. I mean, say the PE current was like a mid-20s, and on a forward basis next year or even the year after would be 15s, maybe I'd consider it. And so I'm being generous here. But as you can see on the screen in front of you right now, I want to talk about a comparison with the Gap again. You can just see a slide I did here. 2001, Warren Buffett bought it. It was all over the news. I didn't like the investment at the time. I still don't. It's gone nowhere. And the question is, can Nike emerge from this plateau, or will they be sideways like the Gap over the years? Put in the comments below what you think. Let's talk, though, about another parallel. Like I said, I need to do a frame of reference. I compare it to Starbucks. I think this is a great frame of reference because from a numbers perspective, the companies are kind of similar right now, although I think Nike has a better balance sheet. Starbucks has a better valuation a little bit, better probably short-term prospects as well, but more or less, they kind of feel similar from a numbers standpoint, so I look at them that way. But as you can see on the screen, let's look at this. And so when I compare Nike and Starbucks, I see parallels. They're iconic brands. They're in times of transition. They have current valuations that are similar. However, I thought deeply about this, and I realized that the two companies, they differ in some key ways. And by thinking about it this way, it really helped me feel kind of better about my Starbucks position and probably a little bit more down about possibly buying Nike here unless the thing gets cut down, say another 40 or 50% in share price. But Nike, it's already really international. Starbucks, I think they have more opportunity to expand internationally. I may be wrong, but that's how I feel based on what I see and understand of these companies. Starbucks sells a simple pleasure that consumers can enjoy daily. And yeah, coffee is expensive now, but it's something that is kind of like you need your coffee every day. Shoes, in times of kind of bad times, we can kind of stretch out how often we buy shoes, and we can have fewer pairs of shoes. We don't need so many pairs of shoes. Shoes, we wear them till they wear out. And yeah, we can buy cheaper coffees, different coffees, but Starbucks, it's a simple pleasure, and we've already seen, even though the economy has been kind of shaky, it seems like people just keep buying Starbucks. And in fact, I'll give you an example. I'm here at Walt Disney World, and one of the parks we went to was the Animal Kingdom, and I took a lot of photos there at the Starbucks. I'm just going to share some of them on the screen. I'm going to share them over on my Instagram as well. Make sure you follow me on Instagram. And it was super busy with lines out the door. And we were at Epcot too, Magic Kingdom too, and we saw similar things there. I enjoyed Starbucks at Epcot, not at Magic Kingdom this time, but we saw lines, lots of lines all throughout the day. Yes, this is a small sample size, but Starbucks, it's a simple pleasure that people are enjoying day in and day out, and I see that at home in Idaho as well. But as you can see on the screen in front of you right now, what I also want to share is Starbucks. They're selling drinks and treats, croissants and spinach feta wraps and all kinds of things like that. We can enjoy it on the go, but we can enjoy it in the store. Nike products, we can purchase them in a store, and it's either going to be a Nike store or another retailer like Foot Locker or something like that, but they're enjoyed out in the world. So that's a little different. Starbucks commands not only the product they're selling, but the environment in which you're enjoying it. Let's keep going though. The Starbucks experience is not only about the product and the environment, but also the partners, the delivery of the product. The Nike experience, it's about the product. It's more difficult for Nike to control the sales process, the environment, unless it's Nike's own stores. And so that was just something I thought of that was very interesting. And then last, while Starbucks coffee quality, it's relatively stable over time, I have a concern. And I'm not trying to say this is just Nike. I'm seeing this all around with things that I buy, tangible things. It is hard these days to find quality. Put in the comments below what you think, but I have seen over time, over the years, the quality of apparel that we buy. It has gone down. Some of the best brands that I really enjoy, even this shirt, I was just reading Billabong, they're going out of business. It's sad. With these apparel items, I don't know. I think it's becoming increasingly difficult for these apparel companies to produce quality at scale. Starbucks, it's a little bit easier to scale coffee. It's becoming challenging for these apparel companies to have quality at scale. And again, I'm not just trying to say, oh, Nike, is the quality not as good? Honestly, I don't know. I don't buy the shoes as much anymore. So that's why I'm asking all of you, put it what you think. But I'm just saying overall with apparel, when I buy new apparel these days, not getting the quality. It's not the same. It just isn't. It's not what I've seen 5 years, 10 years ago. And so I'm trying to hang on. It pays to be frugal. It pays to buy once and buy really well and just enjoy it and hold on to it and take care of it, because it's hard now to buy the quality. And that scares me about the business model overall of being in the fashion industry. And so for me right now, Nike, it's kind of a no. I love the iconic brand, but other than that, I don't like the valuation. I don't like the business prospects. I don't know enough, honestly, to make an educated, informed decision beyond that. But I know Starbucks. I'm not buying Starbucks, though, either at $100 a share. I was buying it back in the 70s and below. And so that's another thing, too, is once I identify a stock I want to buy, it's not only about liking the stock, it's about finding the right entry point. And Starbucks, it's not a good entry point in my opinion right now, and neither with Nike. But even say both of them corrected 30-40% from here, comparing them head to head, I like just the business prospects of Starbucks better because of their entire business model. I think it's a more defensible business model, but I could be completely wrong. I think in the comments below, people are really going to have some interesting opinions on this one who know more about Nike than I do, but I would venture to guess that I know a lot about Starbucks. It's been a passion of mine. And so if you enjoyed the video today, please go ahead and click the like button. It means the world to me. I am taking time off of my vacation here in Orlando, Florida for the community. I love this community. I enjoy doing these analyses. If you're over on Patreon, please ask me questions. If you're not, please consider signing up for Patreon. I'll include a link in the pinned comment below. I'm trying to entertain more patron requests here. Thanks, Corey, for the great question. I hope Nike does really well from here. If it tanks a lot, I may buy some for my kids because they have such a long time horizon here. I need the cash flow now. And I need the dividend growth rate to be there now if the starting yield is lower. Before I go, in terms of full disclosure, I am long Starbucks, ticker SBUX. Before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my own journey for fun and entertainment. It's possible to lose money in the stock market. Additional disclosures in the description below. As always, I love you all. Thank you for watching. Please subscribe to my channel if you have not already. It means the world to me. Please follow me on Instagram, where I'm going to share some fun photos, reels, insights from our vacation here in Orlando. I love you all. I'll see you in the next Dividend Stock investing video.